Hello everyone, I'm Sally and welcome to Atta's latest webinar. Today we have JWSeagon and we're joined by Jeremy Clayton, who's going to be the presenter. Just a couple of reminders before we begin. There's a Q&A box which should be visible on screen, so should you have any questions you can type those into the box and I'll field those to Jeremy at the end so that you can all hear the questions and the answers. Everyone will be sent a recording of the webinar afterwards, so if you miss anything, you can go back and have a look. This will be sent to you via email. As I said, the webinar will be presented by Jeremy Clayton, who is Head of General Broking for the JWSeagon Group. With nearly 40 years of experience in the industry, Jeremy has brought his ideas, experience, and unique insurance products to the region, changing the way that in Africa of general insurer has on with every type of potential risk that the industry generally affords to you.
Okay, good afternoon everybody. Thank you, Sally. As Sally said, my name is Jeremy Clayton. I head up the broking side of JWSeagon. I have been around for far too long, lots of people will say, but in my 40-odd years I have seen lots of things, good and bad, in the insurance world. So to bring things to date, in 2013 I was invited by Seagons and came to East Africa. One of the first products that we launched in Kenya predominantly was our Safari Plan combined policy, which complemented very well our Safari Plan policy. So why did we need to launch a new policy? Our plan really was to try to develop a new packaged policy, avoiding the need for multiple individual policies, and to ensure that the package fully covered all businesses in the travel and tourism sector. With the help of some good quality local insurers and our international reinsurers, we believe we have the best solution currently in the market. So over the last few years, we have seen and heard of many clients being disappointed over their claims not being paid, difficulty obtaining payment, or not receiving a fair settlement. It is not necessarily down to the bad policy, but sometimes because the client has not had the covers explained, not understood the policy conditions, and sometimes the small print hasn't been considered. With Safari Plan and JWSeagon, our covers are the most extensive, and we absolutely explain every detail to our clients. I'd like to give you some examples of what I've seen on certain client visits over the last few years, and perhaps one of you out there has seen similar flaws in their insurance policy. As I believe I'm talking to several different regions and countries, I will convert the Kenyan shillings that we normally deal with into US dollars for the sake of ease. So the first example of what I'm going to give you, I went to see a magnificent high-end lodge in the Laikipia region. And when I got there and they kindly gave me some lunch, I noticed that they had a large amount of beautiful artifacts that had been dotted around the camp or the lodge. And in particular, there were many brass statues of elephants, lions, and the likes. Some were for sale and some they had for their own pleasure, and I inquired as to the prices. They said that they were anything between $1,000 and $10,000, and no real surprise there as the items were stunning. The client then over lunch handed me their policy documents, which I read, and found a clause which I've seen many times in the local insurance market, known as the all other contents clause. In this clause, the cover extends to include artifacts, collections, statues, and the like within the overall contents cover. Unfortunately, and in this particular case, this clause also inserted a maximum value of any one item of £20. Now, I'm no expert on Kenyan history, but I'm sure pounds were phased out many years ago, so I'm guessing they were somewhat exposed. On the same day, interestingly, we flew to another site in the Laikipia area, and this second site was even more grand and even more exclusive than the first one. The owners gave us a tour, and then we again had a look at their policy. Now, this particular client had buildings worth in excess of $10 million. And what first struck me when I looked at the premium was how very, very, very low the premium was. Almost every single building was made of makuti. For those of you who don't know, makuti is like thatch, a local material. For makuti risk premises, the normal rate that an insurer would charge would be a rate of 0.75% on the value of $10 million. In this case, the premium should have been around $75,000. Instead, it had a rate applied by that it was standard construction, and the rate is around 1/5 of the 0.75%. On further investigation and on looking at the, stick with me. As I was saying, the premium should have been around $75,000. The premium was $75,000. So it should have been $75,000. Instead, they were being charged around 1/5 of that. On further investigation and on looking at their fire policy, the first opening clause of their policy stated that all buildings were of standard construction unless mentioned herein to the contrary. It was not mentioned herein to the contrary, and so in the event of a fire, the client would likely have been heavily exposed and probably uninsured. On discussing with the insurer, they confirmed that they had been told by their broker that it was not makuti, so a potential major issue for the client. Moving on, one of the other things that always surprises me when I see clients is the fact that very few understand the local workers' compensation rules which apply in different regions. In Kenya, as an example, we have an act called WIBA, which is the Work Injury Benefit Act, which describes and tells us all of the company's obligations to their staff. The obligations under the WIBA Act basically makes it statute that if anybody is injured whilst or becomes ill whilst at work, whether negligence or not, then the employer has to compensate the individual. So, as an example, if one of your staff dies or is permanently disabled as a result of a work-related incident, then you are legally obliged to pay them the compensation. This isn't an opt-in or opt-out situation. It is statute, and any incident will go through the relevant government processes who will open a file on all incidents. Whether you insure for it or not is entirely up to the client, but let me give 2 examples of the many we have handled. So several years ago, one of our clients' chefs was badly burnt in a fire and very sadly died there afterwards. His monthly salary was $200, and he was therefore entitled to 96 times his monthly salary, which equated to $19,200 plus funeral costs and the immediate medical costs. So many businesses could probably manage to pay this out of cash flow. It would hurt, but it may not break the bank. The issue is, could any of you afford to lose an executive on $10,000 per month, where your statutory obligation to that person would be $960,000? We had an example of that recently, and the amount in question was over $1.2 million. And I can assure you the client was very grateful that they had upped their limit to cover the person. What we strongly advise is that you look at your policy, look at local legislation, look at the limits of any one person, and if it does not comply with the local legislation, then you need to deal with it accordingly. And don't forget, people, directors and owner directors are also deemed to be employees. Again, moving on, one of the largest flaws that we see on almost every occasion we visit clients in this sector are the inadequate levels of liability cover, and the fact that often these local policies simply do not cover you for your specific sector in the overall industry. One client I saw recently was a well-known and very well-respected travel agent and tour operator in Kenya. They had purchased a bog standard local market public liability policy, which had a local limit of $100,000, and they'd paid the standard premium of $100 per annum for that policy. It was a normal local policy, it was cheap, but frankly, it was a complete waste of money. If a customer had walked into their office, had tripped over a wire and banged their head, then they would be covered. But that's about it. I asked them, what about being caught up in a massive legal battle where 4 of your guests that you had sent to a particular camp had been killed or seriously injured in an accident, a lodge or site, or they had, during the transfer from the lodge or the site, they'd been involved in a crash, or they had food poisoning, a food poisoning outbreak at the camp, which they had recommended. All of these would not be covered, and the client may have been looking at a very large legal bill and possibly compensation. Interestingly, with this particular client, shortly after us taking out our safari plan policy, they had 2 incidents in the space of a month where they made serious errors in booking guests, and the claims were for a total of around $12,000. These errors would not have been picked up under their local public liability policy, but they were covered under the professional indemnity section of our safari plan policy, which is standard and provided to them. So in the last part of this seminar, instead of telling you about some of the mistakes that we have come across, I would like to tell you a little bit about some of the successes we have had with our clients, what covers you should be considering, and a little bit more on liability covers generally and your legal responsibilities. So at the end of 2017, 2018, there were some significant floods in the Mara and Samburu. 2 of our clients incurred massive damage to their sites, both claims around $1 million. Of course, one can never compensate for the time, effort, and distress such losses cause, but our policies paid for the replacement of assets, increased costs, and loss of income as a result. Both camps are thankfully fully up and running again. In addition, a coastal client of ours suffered substantial damage to their seawall and grounds. It was not clear initially if it was caused by flood or subsidence, but of no concern to us as both are covered under the safari plan policy. We are pleased they had the cover as subsidence is normally excluded under a local insurance policy. The claim was settled at around $300,000 and the rebuild does now look impressive. One other interesting incident we had in the last couple of years was an injury to an American guest who broke her ankle on a protruding step. Despite thoughts she may have had 1 or 2 late night tipples, the fact is we did feel that there was no defence because the step was protruding, but we didn't want to encourage any legal action, so we agreed with insurers that JWSeagon would negotiate the settlement. After several months of discussions by us with the client in America, the guest agreed to accept payment just for her medical costs, and it was ultimately settled at $10,000, all paid for by the insurer, but without any unpleasantness, adverse social media, or further costs incurred. So these are just some of the claims that we have handled over the last few years. There are many, many more, and we have many satisfied customers benefiting from our policy. The safari plan policy is extremely wide, well packaged, and envied by the market. We continue to take a large market share, and we hope that we will continue to develop the policy and add to it over the next few years. It provides every option that you can think of for your business, and all at competitive prices. As mentioned, we do feel as though we do need to specifically mention the importance of our liability covers. It is your business, and potentially you as owners could be facing the lawsuit. So liability and what it covers. Firstly, it is important that your cover is adequate. While certain African courts may not be so generous in awards being made, this can change, and if there is a multiple claim, then you can consider multiplying the individual awards by the number of claimants. Plane operators in particular consider this when arranging their passenger liability covers. You should also. Our standard policy limit is around $10 million, but flexible. What else may you need? Well, on the basis that many of your guests will be coming from all over the world, it is prudent to have a worldwide jurisdiction clause on your policy for those initial potential legal costs and the cost of bringing the case back to the relevant territory. You may think you have worldwide cover, but often it will say worldwide excluding the USA and Canada, so please be careful. You should also consider including excess passenger liability cover. Local motor insurance policies have limited cover, sometimes as low as $30,000 per passenger. So in the event of, say, a game drive vehicle overturning, any successful claim in excess of that amount, and you may be exposed. Your policy should also include full products liability cover. Many local policies will include what is known as the food and drink extension, but often it is limited to around $10,000 cover, which on a serious outbreak of food poisoning is unlikely to be adequate. We have seen claims of up to $50,000 in the last couple of years per event, so be warned. In addition, if you are supplying soaps, shampoos, body lotions, towels, and such items, or selling artifacts from your shop, they become your product. And so any injury, illness arising from such faulty product is down to you. And finally, professional indemnity cover. Most of our clients will arrange transfers, ongoing flights, outsource balloon rides. Down at the coast, they may arrange wind and kite surfing, water skiing, sailing, fishing, dhow trips, etc. That is what a lot of tour operators and travel agents do, and therefore it is essential you have professional indemnity cover. I mentioned the one client who in their 39 years just made 2 mistakes in a few weeks period. They had no defence and had to cough up. Thankfully, the insurers paid. We also had another agent in the UK who advised the client that they could collect their visa on arrival in Rwanda. Apparently it was true, unless you are a Belgian, and the whole family was therefore sent home. The cost to our client was $21,000, and again, all paid by the insurer. So, thankfully, claims are quite rare on liability insurance, but incidents do happen. And it's the main incidents, the more serious incidents such as airline crashes, car accidents and the like, which can result in serious injuries or even death. There is a real risk of lawyers using the scattergun approach to litigation. Simply, anyone in the chain can be included in any lawsuit. If you do not have the right cover, you will be on your own to fight the case and defend yourself. The question is, would it not be easier to just call me and say, Jeremy, this has happened, can you handle it for me? My answer will always be yes, if you have the Safari Plan policy. In terms of future developments, as mentioned, our policy has evolved over the years with improvements and changes to the covers. The introduction of major extensions, tweaking of wording so that more is covered, introduction of our 24-hour JWS 360 helpline and the likes. Our latest plan is to provide a simple travel facility for all our clients. It is still quite shocking that some people come to Africa without any travel insurance or inadequate travel cover in place. Illness, injuries and emergencies do happen. And what do you do as an agent, operate a camp or hotel? Of course, you will do everything you can for your client, and you all have a duty of care to your guests. Let them suffer and you will get sued. Evacuate them and sort out medical care and you could be faced with a large bill. So what can you do? Well, the simplest way is to insist that every guest or traveller provides evidence of cover before you accept their booking. I have run a business before, so I do understand how difficult it is to insist and to monitor that. Some of you will provide as an option or compulsorily things like the excellent AMREF tourism scheme. That is a great thing, but it is restricted to evacuation only. AMREF and JWSeagon have been working together for the past 18 months for a solution for our guests, and we hope to be able to provide you with a solution very shortly, which will include the evacuation and some initial medical costs to get the client cared for immediately. For those that want to go a step further, we are able to provide a fully insured scheme at excellent rates and one that you could administer yourselves or leave us to do for you. More on this over the next few weeks. One final point, some of you may have had some issues with paying premiums in terms of in Tanzania, premiums have to be paid up front. and it's called the concept of the cash and carry process. There is new legislation coming into Kenya in the next few weeks, which is also likely to see the same applied in Kenya. At JWSeagon, we've been working on various instalment facilities which we can offer for our clients. So anyone with cash flow concerns, we can help in terms of paying their premiums. So to finish, I'm sorry if I've rattled on too long. I'm sorry that we've had the internet problems here, but hopefully the last 15 minutes have been okay. Thank you very much for joining us and for listening. I do much prefer to discuss things face to face with my clients, and I find that there are many more questions that arise. If you have any now, please feel free to drop me a note and I will do my best to answer them. Thanks for listening. And we also hope to see you at MKTE in Nairobi in October. We are on stand number L18. Thank you, everybody.
Thank you so much, Jeremy. That was very comprehensive and very interesting. I hope everyone else found that too. As Jeremy said, if you've got any questions, we've got a Q&A box on the screen where you can type them. And if you think of any questions later on, we will include an email address on the email that's sent out to everyone so that you can email Jeremy directly. Just wait to see if any questions come through.
I think I've answered everything, Sally.
Must have done. Oh, I can see one. Okay, we've got a question from Andre who says, is your cover limited to Kenya and Tanzania?
Okay, we have arrangements in place and discussions are ongoing with several other territories at the moment. And I hope to be able to give some more news by MKTE, which is in about 3 weeks' time. We are very much reliant on local legislation and rules regarding externalization of risks. So I will try to provide more information within the next 3 weeks. I see that Andre has mentioned Rwanda and Uganda. Uganda is an issue, Rwanda isn't so much of an issue. So we can possibly do various areas. There is a possibility as well that we can bypass some legislation as well if any clients can pay us directly to our Mauritius office. But again, I am investigating that with the local regulators.
Thanks, Jeremy. The next question is from Robert, who has basically a similar question saying, are you only operating in East Africa or offering services in Southern Africa too?
Yeah, again, we're looking at all the various areas of Southern Africa and the same comment applies. We are very much guided and controlled by local legislation, and we're trying to find a work around it at the moment.
Thank you. Do we have any more questions? Okay, I think that might be it for now.
Okay.
As I said, I will include an email address on the email that will be sent out to everyone afterwards. So if you have any questions later on, please feel free to drop Jeremy a line. Otherwise, Jeremy, thank you so much for your time, and everyone, thank you so much for listening.
Pleasure, and thank you, everybody. Take care.